May was traditionally a month for selling for bears, but the US default timeline shows that new results may push the bears for later in time, and this possible summer vacation on Hawaii or on any other Caribbean island for them are yet to be pushed in time. So that selling by Mr. Biden shows like finding a possible resolution on the agreement, and that's also what pushing the stocks higher. And right now, the possible correction might be postponed to at least June. Welcome to another episode of Blockrevision. Today we are talking about stocks economy that is laying underneath the whole market moves, and also crypto and other things that matter the most on the market, and ending up with those elements regarded with trading, investing, and also other most important events you need to take a look at. So without any further ado, let's head on. So economy view is the first block we are starting with, and that ceiling likely to be raised eventually. Biden said the talks with Republicans have been productive, and he believes an unprecedented US default will be avoided. So right now we are kind of celebrating on the market that positive news, that news that was really a ball and chain for many of those major indexes that couldn't really find a solution to break out higher. SPY was really overhang at the level that have been throughout a consolidation, that's been this consolidation area for some longer time. JP Morgan Chase Jamie Dimon said that US government probably won't default on its debt after he and other bank leaders met in Washington to discuss the debt limit. Those are all elements that right now finding a positive reverberations out of the market participants. And right now, on the other hand, yes, in a short and medium term, it's maybe positive for valuations, but in terms of economy, getting US more into this indebtedness mode is just showing that what we just have learned throughout previous decades is having this low interest rate at zero, and also that we cannot really indebt ourselves forever right now is backfiring, and those assets that may thrive during this circumstances will be definitely the hard assets and those that are limited with supply. So I would say that for now, celebrating should be postponed until those problems within the economy will get sorted out. But will we have in order to run it and to go it through another more fixed type of a system that may get us out of those problems of this indebted reality is yet to unfold. So that's for now fine for valuations, but in terms of longer term, it brings some cautious. Alarming divergences. So the market is ready to be penciling in cuts. Market pricing for the Fed funds rate change in second half of 2023, and it means that yes, at one side of the coin, we may be right ahead of a possible recession when those rate cuts are occurring. We are penciling into a recession phase. That was just only one excluding example of why that didn't happen right in that way. This was in 1995. But aside of it, the very high inflation with also lowering interest rates, reality has brought to to recessions. And for now, maybe if we don't, as we don't see many of evidence of inflation turning down to this 2-3% levels right now, the possible headwinds in the economy may take place. But as we also may take a look, Fed funds rate movement usually this pivotal moment usually take 3 or more months. So I would rather bet that this possible interest rate cuts may take place further in this year, and with possible stagnation at the period since June to September. So the possible cuts might be visible somewhere within October and December. So that's what I wanted to just point out, and maybe chill that thrills for a bit. So walking down the memory lane, it usually took the Fed around 30 to 60 weeks to eventual pivot. Market outlook, let's have a look at what's going on major indexes. So SPY right now, it's a positive news that we are finding a possible solution for this consolidation, and right now trying to break out of this triangle just been drawn on the lower time frames, but that should also push the valuation higher after a possible spark up. We may hit another resistance right at 420. So right now for both, it's not very good information, as after breaking out of the one structure, we might be right within another very congested territory of 420 and 426. So that was around the elements of SPY. QQQ also is hitting right now the possible ceiling that may bring even more sell-off in the days to come. All right. So what underneath of it? So that topic I wanted to also just drag to today's episode is this AI boom that may reverberate in its outcomes, this .com bubble. So AI has undeniably an enormous impact on economic activity. So right now we are still maybe dealing with how to regulate that type of thing, but no matter what regulations, this revolution cannot be stifled, as it would be a real catastrophe for any of the government who try to really trump that type of possible transformational technology. And AI right now may go in the every direction that's right now it's very hard to predict, but no matter which of the ways, it will eventually just run tech valuations, tech companies valuations will possibly thrive on the things that right now are bringing many hopes of changing the world for better. So tech valuations right now already are recovering after last year's heavy sell-off, and it means that normally after this type of very vocal type of introduction of new type of technology, it may just develop a price action of this big tech behemoths on a Nasdaq. So for now, AI is becoming the real savior of big tech after this interest rate rise that was supposed to be the elephant in the room. So as big tech companies, we are possibly seeing an enormous capex numbers, but we also do expect that AI will provide incremental additions to revenue in the next couple of years, and that's a very nice study with depicting two of the possible bubbles, with right here having 1999, and it was the dot-com bubble, and the cumulative percent return, and generative AI revolution that is right now in its nascent territory and may just develop upon a time with the possible acceleration upon this decade. And out of the other facts, Germany 40 has been this one of the winners of this U.S. debt ceiling debate, already been resulted with some positive outcomes, and Germany 40 right now is hitting just the level around its all-time highs. However, as very often after that has been hit, we have just going through some kind of a correction, and it may take that time this as well. So that's out of it. In terms of crypto outlook right now, as we are heading relentlessly to that block. So another aimed regulatory attack. So Filecoin is this decentralized platform for data storage, has been lately attacked by regulators from SEC. Grayscale said it received a comment letter from SEC that FIL meets the definition of a security under federal law, and asked them to withdraw the application for the trust product. So it's not the first time there is a prolonged battle between SEC and other entities such as XRP. That's the most notorious one battle that right now is yet to get sorted out, and other elements as a decentralized type of a mixer that was called a Tor chain, where those founders have been also prosecuted, and right now even that they were detained. Right now there are no much of a solutions of what to do with the type of protocols that that are not evil in its I would say first business type of plans, but rather reminding of something that may be called a eventuality of having this anonymization type of feature for the cache, and that may possibly bear a marks of a some bad type of precedents. But for me, punishing the protocols by having its decentralized structure and having a eventuality of bringing some of I would say the escape from the centralized already systems is something of a senseless procedures. That's why maybe even though the Filecoin may have some security type of structure, I mean the centralization with a favorization of its founders, I would say that the sector as a whole won't suffer to that extent that many think it would, as those innovations are very, very unlikely to get eventually trumped by regulators, as this movement already has accelerated to a large extent. So I would bet rather for coexistence of decentralized solutions with this decentralized. And after this MiCA, MiCA regulation being introduced to European Union, we can find that there are some elements we need to point out. And regarding crypto asset utility tokens, we need a strict information of who is the possible profiting and benefiting beneficiary out of the whole structure. What's the structure by and large, and what are the possible findings regarding the project. So these are some of the elements that also point out that those regulations and also know your customer type of necessities in European Union will be even stronger. So government officials are trying to make the institutions much more trusted in its way, even though those banks have recently also been at risk of a roundly and profoundly distrusted entities after this SVB collapse, as we all know what has happened out there. So Bitcoin at all shouldn't have such problems, as it's not anonymized that far. Bitcoin protocol lies the possible answer to all of the conundrums posed by trustless word, and even though those regulations may come over, I do find that it won't threat that orange coin at all. But there's silver coin, or whatever you want to call it, Ethereum, recently have stopped finalizing transactions for a while. That insulted in problems with confirmation of blocks that couldn't be finalized. So it's worth mentioning that Ethereum is run by many computers around the world, and it means that when it has multiple client software options, no one client. So if one client experiences issues, other clients can still keep the blockchain running. So it's not a, I would say, obstacle at all, but it has really expelled some of the transactions that were going through DAX crypto exchange platform, and it also brought some concerns that if that problems may reoccur, it may lay a much profounding infrastructure problems that may delay and even complicate the operations for users. That's why Ethereum should still experiment with a new type of replacements for the faulty mechanisms. In terms of market movers, let's find out what we have right here. Bank of Japan is about to possibly pivot finally, as we have right here on economic calendar more data about it. So let's find out what we have right here. Inflation rate is about to get 3.2%. So we have a relief after this very high spark of around 4.5%, and right here we might be heading right back to 3% levels. But if we just wanted to exclude fresh food and energy, we are still rising higher. So unfortunately for the economy, it may eventually get a pivot out of its very low interest rate level of circling around neutrality by that many type of type of a time span. And as we also could find right here, the possible cost push inflation pressures may hit up again after that possible energy prices may rise up in the second half of a year. So Mr. Ueda said that that normalization of yield curve control must come after the long-term outlook shifts up with a high level of certainty, and it also strengthening the view that that policy adjustment by Bank of Japan will likely to come at a meeting when the bank releases quarterly economic projections. So inflation rate right now, by its findings of Bank of Japan, should fall into the level of 1.5% in the second half of this fiscal year. That's very unlikely, and that's why some kind of policy intention could be eventually behind lowering that type of inflation should take place. So we are right now heading smoothly into a earnings season. So Cisco Systems posted better than expected financial results for its fiscal third quarter and inched up its guidance for the July fiscal year. So Cisco mentioned that lead times have decreased significantly due to improved component availability, and right now it may spark some threats that this type of a leadership in some of the segments may get lost. But Cisco is optimistically looking at AI and security type of a sectors that is continue to scale. So Cisco is about to provide the network layer required for training large language models, as these models demand significant computing power. So that's a possible possible advantage of using that platforms, and it's given a much positive outlook for the next weeks and months to come. In terms of Walmart, that's also a litmus paper of a economy and also the American consumer. So Walmart lifted its guidance to reflect the earnings beat, and it said now anticipates consolidated net sales that will rise about 3.5% regarding to lower levels in the former months. So it's very optimistic when looking at possible better performance of DJI or SPY. That's why this very positive wave of a rebound, this year's rebound on a market, should eventually last longer. So that was what lied behind. Right now we are awaiting for Applied Materials. Just to mention, Alibaba Group has surprised to the downside. That's why we may have yet observed a kind of a much more moderate type of a negative value, and also selling pressure on that company. All right, so what we have right here is this trade idea section, and for you today I have exactly nothing more or less than just DE40 that's right now possibly hitting its ceiling. So right here you can find that we are approaching that highs of 16.27, and as it usually looks like when we are hitting that ceiling in price after such a nice volume, I would rather expect this D40 to eventually correct right after hitting the level of 16.30. So if we just like to put this short position and set the standards for a trade, I would just try to make it out like this with 2.19, or even shorten this this red area. So I do bet for crossing through that highs of 16.3 thousand, and right after I do expect that price action will bring a reversal with a possible trajectory that may push the valuation even lower to 15.95. So German economy still have many problems that right now has been also led by this lowering sentiment around the economy, and it should bring some normalization of prices upon this next few weeks. So that's my my point on how to play out this index, and I do find that German 40 within next few weeks will be lower than right now, unless the price action will surprise me. But that's the base case for now. So let me know what you think about this type of idea. You may also consider telling me about your point of view on the issue, and I'm very curious of knowing what do you think about my point. So in today's episode, that's it. We are about to wrap up, and we are calling a day. I'm also inviting you for visiting our social media. There is a TikTok and Instagram running up. And if you just have any other questions regarding our productions, just don't hesitate to pop it right on any of the social media platforms. So